Good day and welcome to the most fascinating session that you will be a part of today. I can assure you that we are talking really about next generation Africa. And part of the big Africa debate 2021 is the Great Reset, isn't it? We want to talk today with an amazing panel, which I will introduce shortly, about really leveraging capital for African MSMEs. And we know this is a hotly debated topic. We know it's very relevant. It is on the tip of everybody's tongue about Africa being the most amazing next continent to make our mark in this world. And how else to better do it than with MSMEs? I'm Catherine Young, the founder of Think Room. We work throughout the continent with ecosystems to grow MSMEs, and I'm also the managing partner at Grindstone and Grindstone Ventures, which is an accelerator where we take high scale up organizations and get them through a process of access to market and access to funding. So what are we going to be discussing today? Really understanding how to leverage the capital for these SMEs. So we know that the SMEs often struggle to leverage appropriate capital. We know it's difficult to get from formal sources. And according to the World Bank, the financing gap in sub-Saharan Africa alone sits at $331 million in that particular report. Blockages to finance from this missing middle, we know it exists both on the supply side and on the demand side of the MSME financing ecosystem. So for these deficits in terms of corporate governance and technical skills and the lack of collateral or proof of concept, how do these MSMEs access credit? I mean, how do they get equity? It's so challenging to really get that done. And we know both investors and banks have the will to, but these are risk factors. That there's a high risk perception of African markets. We know that, and it makes it so difficult to accurately assess the credit rating and assess the potential market share and the follow-on investment. So today we're going to be discussing about bridging this finance gap for African MSMEs. It's critical. We know our continent needs to recover. We know that this could be a critical component. 90% of, depending on which report you read, we know that SMEs actually create employment across the continent. So we have to do this. There's no way around this. It's through. And how can we offer investors an opportunity to tap into this growth, in the world's youngest and most beautiful continent, proudly African, as I truly am. So with that, that's what we're going to be talking about. I want to hand you over to just a quick introduction to our panelists. And I really want to just start with you, Wayne, if you don't mind doing a short introduction.
Catherine, thank you very much. It's my absolute honor to be here. I'm Wayne Hennessy Barrett. I'm the founder CEO of 4G Capital. We are building the neobank for Africa to propel micro and SME growth by providing them with instant working capital to grow their business, blended with enterprise training so that they have the skills to use that capital properly to get better outcomes for themselves and their families.
Thank you, Anne, and thank you for the wonderful work you do, because the training part of that is so important. Tito, over to you, if you don't mind doing a short introduction.
Most definitely. Hi, everybody. Pleasure to be here today. Like was said, my name is Tita Ovia. I am the co-founder and head of public sector growth for Helium Health. And Helium Health is a health tech company based in Lagos, Nigeria, with our mission to be able to accelerate Africa's growth into a better healthcare system using data and technology. And our primary product is our electronic medical records platform that is used across 5 countries all over the African continent. So yeah.
And it's fantastic to have the founder voice on the call. We really are privileged to have you on. So thank you very much for that. Rob, over to you.
Thanks, Catherine, and really good to be here. Name is Rob Withigan, CEO and founder of Asoko Insights. We provide data on African privately held companies, most of which would fall in the MSME category. And we help connect them with global partners, especially funders, investors, and financial institutions in Africa and beyond.
Thank you, Rob. And it's such important work to navigate that minefield for the MSMEs. So thank you for the work you do. Josephine, over to you for an introduction.
Thank you, Karen. My name is Josephine Annan Ankoma. I work with EcoBank Transnational Incorporated. It's a Pan-African bank that is very passionate about Africa, and we are focused on the economic integration of the continent and promoting financial inclusion. I lead the commercial banking business that looks after MSMEs, SMEs, and local corporates in all of the 33 markets that we are present in Africa. And it's a pleasure to be part of this discussion. Thank you.
Thank you, Josephine. And I mean this sincerely from the bottom of my heart. Thank you for the work that EcoBank does in Africa. We hear it on the ground from the startups. So it really is appreciated. Agnes, over to you. Let's try one last time for an introduction.
Thank you very much. And sorry about my connection. My name is Agnes Gathaya. I'm Country Director covering East Africa for Google. Within Google, we've got 3 main offices in Johannesburg, in Nairobi, and in Lagos. And from here, we cover Africa as a whole. Very excited about the last few years where we have increased a lot of investment and focus on Africa as the next frontier for Google.
Fantastic. And whatever you've done with that sales module, I'm just telling you that it's working. All the entrepreneurs are telling us, can we get more of that? So we again feel it right in the market. So thank you so very much for that. I want to jump into the questions. So thank you very much everybody for the round of introductions. And I really want to start with the first question, and I'm going to bring this one through to you, Agnes. We want to understand how can governments, multilaterals and international corporates support the development of specifically early stage financing in Africa. It would be lovely to hear from you and share some examples.
Thank you very much. I think it's a very inspiring, exciting, and great time to be in Africa right now, because we have lots of Africans and lots of companies also from outside Africa who are creating solutions specifically looking at Africa's challenges. Some of these solutions are coming through as tech solutions that really excite us at Google, but also other solutions that will change how Africa grows over the next few years. So most companies, however, when we look at startups within Africa, don't make it beyond even the first year. So globally or internationally, we look at SMEs and we say, you know, how many make it the first 3 years? Here, within the first year, we find, you know, a huge struggle where most companies that are set up actually fall through the cracks. And that happens for many different reasons. One of the biggest reasons is early stage financing. That's a risky area, and I'm sure the risk element is going to be discussed by the panel a little bit later. But there are a few things that we can do as different types of organizations, and a lot is being done to align the efforts of all these different organizations to be able to provide some sort of solutions. So I heard you, Catherine, in your intro speak about getting companies to be pitch ready. So assistance in getting these companies pitch ready, for them to understand their customers better, understand their markets, understand their monetization strategies, their product readiness. This is an integral part of early stage financing. These are the questions that are asked. And if we are not able to completely, when I say we, it means all businesses, including my side hustle. If we're not able to fully articulate these clearly, then it becomes very difficult for an organization to decide how they can plug into the organizations. So a lot of support in mentoring, accelerating these small companies at the early stage to ensure that, and a lot of them have brilliant ideas, that these brilliant ideas actually see the light of day. At Google this year, we have taken in into our 6th cohort of our accelerator program, 15 companies from across Africa. And we are working with them on providing mentorship, providing resources, providing the training that they need so that when they do actually go into market, they're successful in that space. Another thing that we have been doing at Google is we have seen, for example, between 2020 and 2021, the number of companies from Africa that got funding went up 50% year on year, which is very, very exciting. But the number of Black founded companies that got financing was not as big. It's not keeping up with the pace. And there's been a lot of questions about why or how. And some of the things are around where we seek our funding. So a lot of the funding is sought from the US, from European markets, where there are lots of organizations within those continents who are actually fighting for the same funding. And one of the things we have been doing is we've been having conversations with investors, African investors, around being angel investors around this early stage. And we have actually put our money behind this. So we currently have what's called a Black Founders Fund. We had put out a call for applications. We got many. We got a significant number of applications that are still being sifted through, and announcements will be made later in the year in those that have been successful. But for each one of them, what we were providing is equity-free funding of about $100,000. Now, $100,000 is a large amount of money for a micro or a small business just starting off. But we're also matching that with about $220,000 worth of ads grants, cloud grants, a lot of the things that defray the costs, significant costs of taking a product to market. And of course, mentorship and partnering some of these organizations with large organizations that can provide them the mentoring they need to be able to last the 3 years, where we then say that they will be successful. So someone has
absolutely fantastic, Agnes. I think it's absolutely fantastic because you are addressing the two key things that we can really help these MSMEs with, and the one is access to funding. And I completely agree with you. I think we have an African diaspora that across the world actually that we can, as angels, get together and create funds for Africans over and above just the traditional funds. And then the access to market component is so important. Your point that you raised around, teaching them how to sell, because for many of these startups, the big corporate world is just a blur. And you've really been doing amazing work in this space, and we appreciate that. So I want to thank you for that. I want you to just so if you can summarize it, if there's that one thing that you truly think that we can, of course, there's not a silver bullet, but that one thing, if we can start focusing on that after this conference, what would it be? What would that be, that one thing that can help support these MSMEs?
I think the most micro, small, and medium enterprises have fantastic ideas. Being able to take that idea and make it market ready is the difference between actually getting funding and not getting funding. Whether you're going for traditional sources or whether you're looking for angel investors. So significantly working and ensuring that the product is solid, the vision, any investor can see ahead in terms of where this product is going to be 4 or 5 years from now, the value and the challenge it's actually solving within the continent, ensuring that those are very clear. Then after that, the funding conversation would then be a lot easier. So investing in this mentoring partnership and making them market ready. I think that for me is the biggest takeout.
I absolutely love that. We always say your best source of funding is a customer. It's your first best source of funding. And I absolutely love what you're saying, Agnes. Any other comments from any on the panel to add to this before we move to the next question?
I'll quickly touch on the topic of corporate ventures and corporates as a funding channel to that early stage space. First of all, I think it's worthwhile to to just emphasize how much that category has evolved over the last 10 years as an investor. I mean, 10 years ago, if you would have spoken to whether it's a bank or a multinational FMCG player, an oil and gas company, about investing in an African startup or early stage enterprise, I think the reaction would have been very lukewarm at best. Whereas today we see a very active space of big and smaller corporates actively investing in early stage companies, which is a really important evolution. There's no better way to help these early stage companies than to make extra funding available. Corporate VC, however, is still one of the smallest contributors to that fund, to the supply of funding. So I guess my recommendation, my call to action to the large corporates on the continent would be to become more proactive, more enthusiastic about becoming a funding partner in that early stage space and really help build up the supply side of capital that's available.
Thank you so very much, Rob. That's a very important point, and some of the forerunners of corporates who are doing this on the continent, really, some of the ones that we engage with are really seeing the benefits. I really appreciate that. Thank you so very much, Agnes. That's insightful, and again, thank you so much for the work that Google's doing on the continent. We, from an ecosystem point of view, really appreciate it. So, no better person to ask than the actual startup on the call, right? So, Tito, I want to come over to you and speaking from your perspective, which financial products truly do you feel are best suited for an African MSME?
Great, thank you so much for that, Catherine. So, to be very honest, we can't generalize about which financial products, work depending on, because Africa's a huge continent, so we can't generalize because some might work better in Nigeria than South Africa, than Ghana, Kenya, and so on and so forth. And of course, you then go even deeper, and then it differs depending on what sector you're in as well, and which financial products would best be suited for whether you're in healthcare or whether you're in agri-tech or an invest tech startup. And then, it goes even further to what stage of the SME pipeline are you really in? Do you just have an idea that's in your head, but there's no prototype? Do you have a prototype that you're looking to try and scale a bit more locally? Again, it really does differ, but, I've sort of written down for me the three main financial products, at least even from our own experience and our growth in Helium Health that, we've sort of touched on and we've used. So, the first one is grants, right? I like to say that there's a grant for almost anything in the world. And in the very beginning stages of Helium Health, where, all we really wanted was just cash, to be honest, to be able to test our idea and test our prototype and get developers and be able to see if this product truly works. We accessed a lot of grants, whether from USAID, whether from, I think you even got a grant from Google as well. There were a lot of grants that we got, Cisco. And I think the great thing about it is that what you have to know as an SME to be able to access those grants is that you must be able to hone your narrative and your storytelling. You must be able to convey your idea and put together, proposals and things like that, in which, that funder can be able to give you that grant. So it doesn't matter what sector you're in, there is always a grant from donor funders somewhere online. So for you to sort of do your research and find that. Then sort of as you then progress and, you've sort of maybe used all the grants that you possibly can and you're tired of doing all this and you really want to more get sort of strategic investors and things like that onto your cap table as an SME. So I would then say equity is a great one as well, because, right at that stage as an SME, you're not sure, you're not necessarily making any profit that you can start doing any profit sharing or anything. But of course, possibly giving equity for future growth and valuation in the company is great. And that's something that we did as Helium. And I have to say that finding investors, whether they be angel investors or VCs, it's not a one size fits all. So again, like with grants, right, how there are specific grants for specific sectors and specific donors, it's the same way with VCs and angels as well, that there are certain VCs that only focus on fintech. So if they only focus on fintech, for example, in Southeast Asia, I have no business as a health tech company sort of even approaching that VC in the first place. So again, a lot of people, they sort of see the big names of the VCs and they want to get them on their table, but they may not be the best for you. So again, it takes a lot of research for you to be able to look at that. And then finally, I then talk about having to do collateral-free loans. And this is even something more specifically that, us in Helium Health, we're doing right now in the healthcare sector, where we're giving collateral-free loans to hospitals of up to 10 million Naira to be able to grow and progress their business. So, being able to do that, because as an SME, you may not have, again, much to your name. As a tech company, again, all we have is tech, right? It's not your traditional collateral of here is a building or here is a car, here's an asset specifically. So having something like that and having to be able to show, whether it be the bank or the financier, whoever it may be, sort of data and information about why you deserve to be able to get that collateral-free loan or get collateral-free debt is very important. Going specifically in Nigeria and looking at the things that, or the vehicles of financing that SMEs have. For example, I know the central bank does vehicles for agriculture investments. I know certain banks do sort of, loans and collateral-free loans to female-led businesses and tech-led businesses. So again, it really just depends on what stage you're at. But really, I would say, collateral-free debt, at a stage where that you're really making profit, that you can pay back, you have a steady business model as well, and you have enough data and information with your business. So yeah, those are really the main three vehicles that I would touch on for SMEs.
It's absolutely insightful, and I completely agree with you. In fact, I think you've got me. Every week there's a quote of the week for me on Twitter, and I think you've got the one. There's always some form of grant funding somewhere, right? So, and I so agree with you, and it's so important, as you said, for the startup to be able to share the narrative in a way that the grant will come through. So absolutely agree with that. And then holding on as long as possible before you start loading your cap table with investors. But then just a closeout question on this specifically, if I may, Tito. So this collateral-free loan, you're really onto something, and I agree with you. And I think if there are more institutions that would be open-minded around this, we could really move this needle forward. So if there's a piece of advice that you could really give to the MSMEs listening to this right now, in terms of how to just push through, how many times do you try until you get it right around this collateral-free loan? Can we just go one level deeper for another minute or so on that?
No, most definitely. So, first of all, I will tell the SMEs that data is king, as we're beginning to know. The reason why, sort of, I guess, traditional financiers don't sometimes want to give to SMEs is because they don't, first of all, they don't understand the business, right? In the first place, they don't understand the sector. It's not what they're usually investing in or giving loans for, sort of telecoms that we know well, banking and finance, oil and gas, right? So again, they don't understand your sector. So first of all, again, it's important that you hone your skills of your narrative about understanding your sector. But again, you also gather all your data and you're sure you're able to present it in such a way that the financiers would see how they can be able to get their money back. What is the true value in the business? Because that is the only way, again, that you can sort of leapfrog that challenge that you may have. Sort of for the hospitals that we actually give, the collateral-free loans to, it's because we're able to understand their finances. We have insight into their data and their information. So again, it's very easy to be able to, give them these loans within 48 hours because of that data and information. And again, so I would truly advise, SMEs from the very beginning, make data a priority, make it your king, start doing your monthly performance reviews and things like that, in which you can see and track your own growth, because it wouldn't be important in the long run. Yeah.
Fantastic. You touch on such a critical issue. It's not about the product after all, is it, when it comes to financing? It's all about the data that the financiers require. I absolutely love that. And thank you for the tweet of the week. We'll follow up with that right after this section. Okay, fantastic. Wayne, I'm going to be coming to you with a question, and really want to speak now a little bit about micro enterprises. So how can micro enterprises leverage better access to credit and then de-risking the solutions, right? So following on from Tito in some form actually on this question, but over to you, share that with us.
Oh, well, thank you, Catherine. So people understand what 4G Capital does. We are a lender. We provide micro loans to micro enterprises and the smaller SMEs. So we're talking between $50 and up to $1,000 for small businesses that are actually highly profitable and have very, very fast, spinning high velocity business models and who command pretty high margins. And we blend those loans with a progressive syllabus of enterprise training. So that's the solution we provide. And we know the challenge is access to capital for so many people. But the situation is getting better. There are lots and lots of lenders out there. So I guess that your question, how do MSMEs leverage access to capital? Okay, so once they've got the capital, how do they leverage? How do they get the most out of that capital? And it really speaks to the fundamentals of this conversation, because listeners need to be aware that Africa is full of extraordinarily talented business people, of all varieties. And so Africa has always been a great bet. But the contributors, Agnes and Tito and Rob, have made fantastic points about preparation. And so speaking to the small startup founders and the entrepreneurs who will be listening into this call, making sure that you've got your preparation as good as it possibly can be in the first place so that you can make your case, and where data is available, present that well, but also focus on your unit economics. The people that we serve and the people that many other people will be engaged with here, it's not a J-curve, it's not a hockey stick story. They, forgive background noise, it's not a hockey stick story. They've got to be profitable, cash flow positive businesses now, because they're feeding their families, they're running their lives. And so we give people the wherewithal to grow an existing successful business, to make it more successful and stronger and bigger, and to diversify. So how do you leverage that access to credit? Plan, have a budget, keep records, be organized. And that's the kind of skills those are the kind of skills that 4G Capital helps with for people who are incredibly resilient and great, but often have not had access to education or to the provision of life skills or to the opportunities that educated people of all cultures, can sometimes take for granted. So how do you leverage that access to finance? It's just be the best business you can possibly be, and be strong about what you're strong at, but be humble about what you need help with. And I think that's as true for all of us as it is to the micro SME community.
Wayne, and you touch on an interesting point. Be humble about it, and I really want to just go a level deeper onto that, because very often the SMEs are just plain scared, right, to be speaking to their funders or their financiers about if things go wrong. Can you just talk to us a little bit about what does that look like? Be humble, be transparent. What if things go wrong? How would you recommend that the SMEs then work with their funders or financiers through the challenges?
Catherine, this is such an important question, and it applies to founders like Tito and Rob and myself as much as it does to my customers, and it really speaks to make sure you work with the right people in the first place. Be very, very selective about who you take money from and who you do business with on the other counterparty, because not all companies necessarily operate in the same way. We're an extremely proud B Corporation. We champion the values of shared value. I think we're Africa's highest scoring B Corporation fintech. And so, we succeed when our clients succeed. And so, by way of example, when COVID hit last year, we all remember that with a shudder. We're still living with it. We dropped our prices by 10%. We waived all late penalty and arrears fees. We don't and never have blacklisted people in the Credit Reference Bureau. We treat people with the dignity that they deserve. And consequently, as a company, we get in excess of 94% on-time repayment rates, often higher. And consequently, our customers will grow their revenue by an average of 82% over the course of a year. So we're all about client success. So in terms of handling that risk for the micro SME, be very careful who you take money from. And I don't mean to sound self-serving, but there are other good companies out there. Just look at the terms and conditions, check the reputation of the lender that you're working with. But then if you're genuinely in trouble, just talk, be clear, stand your ground, and people get it. And if they don't get it, if they just want to collect and get the money back, well then, okay, don't work with them again. Work with people who are actually interested in seeing you grow and seeing you succeed. But we know life is tough. We don't, our clients, those who struggle to repay, don't wake up one morning and go, yeah, I see what I can get away with. There's been a death in the family, or there's been a drought, or there's been a flood, or there's been a market fire. And that is a reality of life for many, many people. And so any good outfit will understand that and say, we get it, and we're going to help you get back on track, and we'll rehabilitate you and get you back to a position of health. So at closing, update, we're recently been working with CGAP and with the Social Performance Task Force to develop an early warning system for client indebtedness. So a really smart, data-driven, algorithmic solution with just a couple of very light, non-intrusive questions to clients, so that our AI can pick up when somebody is looking like they're going to get into a default situation, and we can then intervene accordingly. So just talk to them, find out what's going on, or maybe adjust the kind of financial product that is working for them. And we will be reporting on this in the very near future and sharing our findings with the rest of the industry, so that hopefully we can see people up their game and create sort of better outcomes for customers across the industry, not just at 4G Capital.
That sounds like a fantastic solution, and I think please share that into the market, which I'm sure you will, because if that can show that the risk is reduced, the more capital may well flow to the startups. I know I'm out of time on this question, but I want to sneak a quick 30-second response out of you, Tito. There was something very profound that Wayne said, and it almost gave me the sense of not all money is equal, right? So that thing of be very sure who you take your money from your perspective as an entrepreneur. Give us a 30-second response on that.
Oh, no, I completely agree with Wayne. I always say not all money is good money, right? And, it goes back to, I guess, what I was saying about, tying up with, investors, whether it be angel or VCs, that do understand your sector in the first place, do understand the landscape as well. Because doing business in Nigeria is even different from doing business in South Africa as well, that understand in the first place. It's very important. And that, drives honesty and, a great working relationship.
Fantastic. Thank you. So all the entrepreneurs listening, where you've heard this rhetoric before, now it comes from an entrepreneur. It is truly true. So thank you, Tito Wayne. That has been most valuable for sharing that. Rob, I want to come to you, and I want to really, talk about DFIs. And DFIs have done amazing work for us on the continent, and they continue to do amazing work. And depending on which side of the line you are, it's seen as good and bad. But they really have supported in so many ways. So in terms of DFIs, what role to DFIs and multilateral organizations, what role do they have in supporting MSME investments? Because really from a DFI to an MSME, that's a long chain, right? But share with us your thoughts on the role around this.
Right, thanks, Catherine. And let me just start with talking a little bit about DFIs in particular, especially since the start of COVID. I mean, DFIs have always been critical to the funding landscape on the African continent, but especially since COVID, their role has been amplified quite exponentially. I mean, they filled a vacuum where the commercial money disappeared overnight in some cases, in order to help provide emergency and recovery funds to MSMEs that were in the highest need, especially in the early months of COVID. But that early sort of a gathering of emergency capital and quick allocation has now resulted into, I guess, a longer term, bigger role that DFIs have carved out for themselves in the funding landscape in particular. So I just want to I guess start my answer with framing the role and the augmented role that DFIs play even in today's gradual post-COVID scenario. In terms of, again, DFIs particulars role going forward, there are really two main areas for them to play a role in, one direct and the other one indirect. On the direct front, there's actually a lot of help coming out of the DFIs at the moment, and I should in particularly talk about some of the more proactive and well-funded DFIs who tend to mostly be US, Europe, and to some extent Asian based. They're increasingly directly investing or making funds available to MSMEs, whether through grant funding or concessionary loans, or in some cases equity investment programs. I think a big challenge that the DFIs have in getting to the right MSMEs is just making sure that the MSMEs know about their programs in the first place and can access them in an efficient and cost competitive manner. Application programs can be overly bureaucratic, can be quite exclusive to particular criteria of MSMEs, which quite frankly isn't aligned with the access that an MSME has on a day-to-day basis in a busy work life of an MSME business owner, chasing grant money and having to go through lengthy administrative procedures is not always the best fit. So improving that access is crucial from our perspective, and where Soko Insight plays a role is facilitating for digital interaction between the DFI looking to allocate capital and an MSME looking to qualify for it, sort of lowering the burden of submission of data, again, that critical word data, from MSME back into the DFI, and helping DFIs kind of go through that information rather efficiently so that their investment teams can quickly choose the MSMEs that they can support. I think that access is a critical point of improvement, where DFIs should be playing should be putting more efforts in and are, but more work is to be done there. On the indirect front, I think their particular role is to be a funder of funds primarily, and funds investing in MSMEs like Wayne and others, making sure that the DFIs actually make money available for these on-the-ground players to distribute, but also help with some of the, let's say, the infrastructural elements, credit ratings, for example. I mean, the system of credit ratings on MSMEs is fundamentally broken, right? Like it needs a very different approach than, let's say, the best practice credit rating principles that exist in advanced economies. There are great initiatives out there that are looking at other signals on MSMEs in order to come to an effective credit rating, but those initiatives need funding and need oxygen and need spotlight in order to be taken as the right standard by the wider investment climate. So I think that's just one of those indirect infrastructural elements where they can play a role. And finally, I mean, DFIs are all very big on ESG investments. MSMEs, because of their big impact on employment numbers and ultimately, their big sort of community relations that these a fragmented but very large volume of businesses have, there's no better audience for an ESG impact than an MSME audience. So also just channeling funds while sticking to the ESG lens, but channeling it to the ultimate MSMEs that can impact the ESG indicators from a bottom-up approach, I think is a critical future area where DFIs can make a big impact. I'll pause there, Catherine.
Oh, Rob, you've actually just given me such a light bulb moment about exactly that. There is no, this is a close second quote of the week. I must be honest, Tito, there is no better audience, than MSMEs for the ESG impact, because it's a question that we're all battling with currently as funders and ecosystem players. So that is profound. Really, Josephine, I know that you also have a specific passion around this, and I just want to cross over to you in terms of, do you have any comments to add to this discussion here?
Thank you very much, Catherine and Rob. You're spot on your comment about especially support from DFIs for credit rating, because information asymmetry is one of the key reasons why banks typically shy away from lending to MSMEs. So providing that support, is something that is critical. And I know that, for example, in Senegal, the government of Senegal is focused on, providing some level of SME certification. And in the loan process, EcoBank Senegal has partnered with a government agency that provides certification for MSMEs. And we input that, in giving loans to customers that qualify. And so that we find that to be very powerful. But another area that I think DFIs can support banks is in the area of risk sharing. For most of us banks, it's not an issue of not having the clientele. We do have the clients, and it's not an issue of them not having, viable business plans. We're able to grow them and advise, like Tito and the rest of the panelists have said, to make sure that they put across bankable business propositions. But it's the issue of risk, getting into that startup capital, and how do you balance that with protecting the capital that investors have put into your company. So DFIs coming on board, partnering with banks to ensure that we're able to provide credit guarantee schemes, to us lenders, to enable us, free up our book, de-risk our lending, and expand access. I think is something that it's something that DFI should look at. And we at EcoBank is, for example, with agenda financing program Elevate by EcoBank, have approached a number of DFIs to provide us with credit guarantee schemes to help us lend to women-owned and women-led businesses. Thank you, Catherine.
Yeah, that's fantastic, Josephine, and I fully agree. And to all the DFIs on this call at this moment, we know that many of you have been, and we are appealing to really help us further along the way, because this is so important. I've been on projects where I've seen this really work and just empower the MSMEs at the next level. Josephine, you're still in the hot chair. I want to, if it's okay, I want to just stay right with you and actually talk a little bit about banks, right? So, do you think banks can really use digitization to better support our African MSMEs? There's this rhetoric that actually we are digitally quite transformed from an African perspective. If we just look at the definition of digitally transformed and not connectivity. But how do you see the role of banks in terms of digitization?
Yeah, thanks a lot for the question again, Catherine. I firmly believe that digitization is critical in supporting MSMEs, especially in today's world where we are faced with a new normal as a result of the challenges that have arisen from the COVID pandemic. We are experiencing significant shifts in consumer and merchant behavior, and it's transforming the way we do everything, from the way we work to the way we interact with each other, how we buy, how we pay for things. And these shifts are here to stay. So going digital is no longer nice to have. It's a must-have, and businesses who are ready to adapt and re-engineer are really the ones that will remain relevant and successful. And banks are increasingly exploring options to deliver both financial and non-financial solutions to MSMEs through digital platforms. I mean, we can talk of online banking, online account opening is pretty common today. We have digital solutions that enable payments and collections, and there's a lot of foray into digital lending as well. So banks have explored the opportunity to have invested, a lot in technology to deliver these products. But key to this is also leveraging partnerships with fintechs and with mobile network operators to deliver these digital solutions to customers. And this definitely provide great benefits to MSMEs. I mean, we're able to give them convenience. We give them speed to market. We improve access to finance, and we provide them with a reduced cost to serve and expanded market access. And I can speak of what we are doing at EcoBank. For example, over the past 2 years at EcoBank, we have partnered with a fintech and a mobile network operator to develop a digital lending platform. And over the past 2 years, we have disbursed over 600 million microloans to 2.5 million individuals and small businesses. We literally, on the back of this platform, are able to disburse an average of 10 microloans every minute. Additionally, we are currently partnering with one of the finalists of EcoBank's FinTech Challenge to deploy a supply chain financing solution that would leverage on value chain opportunities with blue chip corporate names that we have on our book. Another opportunity to leverage digital to better serve African MSMEs is in the area of training and capacity building. And a lot of the speakers here have alluded to the fact that we must make the MSMEs pitch ready. Training is important. Throwing finance at the MSME without equipping them and making sure that they are ready for market, it's like putting money down the drain. Last year, for example, EcoBank partnered with the Outer NEPAD to co-lead an Africa-wide response to help MSMEs navigate the challenges that were brought about has been brought about by COVID under the Outer NEPAD's 100,000 MSME initiative. And one of the pillars of this initiative was to empower MSMEs with access to capacity building through the establishment of an MSME academy, which is currently online. We have pushed the envelope further at EcoBank, and in Q2 this year, we pioneered our EcoBank MSME training for financing program across 8 of our markets. And participants were taking through courses on risk management, business sustainability and bankability, adapting operations in the new normal, business compliance and leadership. And there was a legal module that was as well delivered by Outer NEPAD. Now, this training program was simultaneously delivered virtually through the support of our EcoBank Academy, and the facilitators were EcoBank staff. And we delivered this training virtually to 415 MSMEs over a 6-week period across 8 countries. We did this virtually simultaneously. And participants who successfully graduated from this program and now have the opportunity to apply for working capital financing. And as we speak, we are currently processing their request. So at EcoBank, we've made significant investments in technology, and we continue to leverage on our capabilities to offer MSMEs the opportunities to digitize and to develop their businesses, because we all agree that is the way to go. So we have a proprietary payment solution, which is EcoBank Pay, that enables you to scan and pay and receive your collections digitally without cash. And everybody knows that everybody is trying to shy away from cash today because it could be a transmission, a vector for the COVID for the disease. And of course, we also have our EcoBank Omni Lite, which is our proprietary online banking solutions that MSMEs can use to do their normal banking. So we actually are trying to move banking away from bricks to clicks, and we believe that is the way to go. And thanks to Agnes and our partnership with Google, we also are providing online presence to our MSME. So really, I think that is an important thing if we want to broadly and adequately serve MSMEs in today's market. Okay.
It's fantastic, Josephine, and truthfully, again, from the other side, working with the MSMEs across the markets, truthfully, you're having impact, and it's greatly helping. So thank you for that. But Agnes, I actually want to come to you, because from a Google perspective, you can really add here, and Josephine has just mentioned that. So over to you, if you just have any comments on this particular question.
Yes, in terms of bank digitization, I think the last 2-3 years have seen the banks grow by leaps and bounds. When we talk about digitization, especially in the areas of assessing credit risk, many fintechs as well as banks are looking at partnerships with telcos and other organizations who can give them an idea in terms of cash flow spending for especially the micro type or size of businesses. And we have then seen a large number of different financial applications really spread across Africa and provide really much needed cash flow to especially the micro businesses. Now, that has then created, a really good thing has then created a problem around some of them just really behaving badly. And I know Wayne can spend a whole hour talking about lenders who behave quite badly, and is seeing a lot of pushback from a lot of regulators in terms of data protection. So it's a two-sided tool where we must use the digital innovations that are coming out with us with a huge sense of responsibility. And I've seen at Google, for example, we've taken down quite a number of predatory lenders who are misusing a lot of this information from our Google Play Store. And we will continue being quite vigilant in it. We have seen regulation come into play. I know in Kenya, there's a draft bill around data protection and the lending business, the lending side. So as we adopt digitization and as we adopt new technologies, there's a sense of responsibility that we must take as large organizations to ensure that we safeguard and do not make the same people we're trying to help more vulnerable.
I think that is a critical point, and you're absolutely right. Because for the MSME, if the communication is clear and upfront about this over the long haul, of course it needs to be a robust long plan. It is for their protection after all, and I think that is an absolute pertinent point. I really appreciate the inputs there, Josephine and Agnes. Digitization is with us, and it's going to be with us for a long time. And the third competitor for the tweet of the week is really, we've got to do it responsibly from Agnes. Absolutely. I've got one last question for you, Josephine, and then we'll go actually to the audience's questions. So really, just in short, Josephine, if you can tell us, are traditional lending approaches actually appropriate for African MSMEs, where we are today in a post-COVID world?
Okay, so if we look at it this way, what are the pain points of SMEs? It's they want finance, they want capacity building, and they want access to markets. So if we should solve their problem, we shouldn't just pick one. We should ensure that what we are doing is holistic and is able to address all of these points. Now, if we take traditional lending approaches, these typically would rely on audited financial statements to assess the obligor, and then you would require them to make monthly repayments, and then you would want them to secure their financing with some fiscal asset, such as a mortgage. And this may be suited to, some larger SMEs that are better approach really stifling. First of all, these MSMEs lack financial records, and they cannot, bear the cost of providing audited financials. They are not always able to fully articulate their business objectives in the language that banks understand. Their cash flows are seasonal. So if you expect them to make strict monthly payments to you, sometimes it's a push. So at EcoBank, for example, we are cognizant of these gaps that MSMEs face, and we have designed asset-based lending approaches that enable us to finance them on the back of confirmed contracts and receivables that they can ring-fence. So we move away from asking this traditional approach that asks an MSME to provide you with a financial statement, to provide you with a house, to provide you with a car, and rather focus the lending on cash flows from anchor corporate bank names that we see, that we know, that we can ring fence. So we have designed credit programs that enable MSMEs to qualify for loans on the back of these confirmed cash flows, and they are not required to provide us with audited financials under these credit programs. And we are able to support them with working capital loans, local purchase order financing, contract financing, invoice discounting, you name it. And most of these credit programs that we have are guaranteed, or they are supported by credit guarantee schemes from DFIs, and we spoke about that earlier, and that helps us to de-risk our funding. I've also spoken to the fact that in addition to focusing on lending, we need to focus as well on capacity building. So through the Emerald Clubs that we operate at EcoBank for our MSME partners, we're able to provide virtual training programs and networking opportunities for these MSMEs, and these help to build them up. And we've spoken to the importance of that to support the lending. And then we have spoken to our partnership with Google, and we're able to provide them with free online access. And as we speak today, we have close to 20,000 of our customers registered on Google My Business and counting. We also are delivering e-commerce solutions to our MSMEs in partnerships with fintechs to provide them with enhanced market access. So Catherine, yes, traditional banking is not what the MSME needs, but we need to ensure that we are lending to them on the back of things that we can ring fence, that frees them up. So these asset-backed lending approaches that focuses on cash flow instead of houses and building really is a way to go if we are to support our MSMEs. And then pack that one up with capacity building and then access to market. Then we have a complete solution. Thank you.
Truly a refreshing way to look at it, because that comes back to the rhetoric of working with the SMEs in getting the customers to fund, and that speaks right into you are able to then build off the back of that. It's been a fascinating panel. I really truly I'm so appreciative of all the amazing insights. We have 2 questions just in the wrap up from the audience. So Wayne, if it's okay with you, I'm going to be coming to you first with this question, and just allow me to read it. We've talked a lot about tech startups during this discussion. Given 4G's customer base also featuring a lot on non-tech MSMEs, do you think these MSMEs outside of the tech sector get overlooked in the funding cycle?
They categorically get overlooked. They categorically get overlooked. I mean, they are our raison d'etre, and they comprise the vast majority of the economies in sub-Saharan Africa. A slightly harsh truth, I'm afraid, when it comes to raising capital and investing capital, but there are some sectors which are really sexy at the moment, and there are others which are really not. And particularly for the micro community, access to capital is really hard, because these are often mom and pop, meat and potatoes, literally businesses that are moving stuff to feed people, and they have huge potential. And part of our strategy is to digitally enable them with digital toolkits, as well as training and with capital. But look, there are hot sectors right now: healthcare, off-grid energy, last mile distribution, boom. And there is a growing and evolving in ecosystem, which is still learning, sometimes learning old lessons about getting good, profitable, sustainable, building block businesses in the first place that can then be grown and enhanced and augmented with technology, with data, with great management and all the rest of it. But I'm afraid that sentiment is often the prevailing force rather than logic. That's not fair. Rather than cold facts, and that's just because we're human beings living on planet Earth. So I would just reprise my prior call to arms of the enormous opportunity that our customers represent, and that the customers and the businesses. So yeah, they're overlooked, but there's a massive opportunity.
Fantastic. Thank you. Thank you so very much. I do agree with you. And in fact, just sustainable food. And so we have a lot of work to do as an ecosystem at large on the continent. So thank you very much for responding to that. We have our last question from the audience. If you just allow me, Rob, we haven't heard from you for a little bit. If it's okay, I'm going to bring this one to you. Africa has one of the highest levels of female entrepreneurship in the world. Can you speak about some of the barriers that are faced by women-led MSMEs in access to finance and any solutions that you can offer? And we're on to 2 minutes. Thank you.
Thanks, Catherine. And I'll keep it short because I want to make sure I leave room for some of the women on this panel who I'm sure have an interesting perspective on the issue faced by women-led MSMEs and accessing to finance. In my experience, it has a lot to do with it coming down to relationships with financial institutions in many cases, and it unfortunately still is a male-dominated world in many respects. And because in general, women-led, and I'm being very generalistic, women-led MSMEs are, I guess, less networked with, again, some of the male-dominated banking spaces that they have a harder time just getting the attention. As far as the solutions that an organization like mine are offering is just making sure we put the spotlight on women-led MSMEs and companies in general. And just 2 days ago, we've actually launched a women-led MSME map where we've profiled 100 women-led companies that are doing great things on the continent. We are working with the United Nations very much in their line of thinking around sustainable development goals. Currently, we're focused on SDG number 5, which is all about gender equality. And so a data provider like mine are taking that opportunity to really spotlight those companies that are contributing to the gender equality topic in general, and doing that from a women-led perspective in particular. And that data set is accessible for all of the listeners on this call as well as the wider public.
Fantastic. That's so very true. I know we're out of time, but I really want to just continue the conversation, and I want to really go to all 3 women on the call. If you can give us 30-second view, Agnes, Josephine, and Tito. Over to you, Agnes.
I think, as Rob has said, when you talk about a funnel or when you talk about the bottom of the pyramid, if something is not working well at the top, women always get the brunt of it. And I think one of the things we did at Google in 2017 was to make a $20 million commitment to economically empowering women in Africa. And we do that through partners. And a few people here have mentioned our partnerships, but one of the most recent partnerships we had that we signed in June was with the Tony Elumelu Foundation, where they're going to work with 5,000 women to give them, the whole suite that we talked about earlier: mentorship, funding, and ensuring that their businesses are fit for purpose and are incubated so that they actually grow to a point where they are sustainable. But this is something that must be intentionally done, and it has to be done with financing that is extremely friendly for these women, because they are brilliant entrepreneurs.
And Agnes, to be very honest, really just from an ecosystem play perspective, not even a female one, we're very clear with our teams now. If any application comes in and it's not 50% women, 50% men, we just literally don't move forward. It's we've had to take the hard calls, but in our small way. And you are so right. We've only just started, but we all have such a responsibility. Josephine, I want to hear your voice on this, and Tito too. So quickly, over to you.
Yes, I think we all know why it's difficult for women to access financing, so I wouldn't go through that. I want to talk about the solutions that we are offering, and I want to talk about Elevate by EcoBank. This is our flagship gender financing program that is aimed at providing both financial and non-financial solutions to women. We find that to be absolutely critical, because in addition to the financing, they require capacity building. They require that we're able to move them from their shops to markets so they can sell and repay us back. And I want to speak to what we are looking to do with the Global Business Schools Network, working with EcoBank Academy, is to set up a Women Business Leaders Academy, where we'll be providing financial and leadership training for the women that we enroll under Elevate by EcoBank. So yes, we need to provide financing, but we need to add on to that capacity building so that these women are bolder, are stronger, and are able to, better manage their businesses that they start. Thank you.
Amen to that. And it's very appropriate to end with you on this question. Over to you.
Oh, no, most definitely. Thanks, Catherine. I mean, I was looking at statistic even earlier today, and I think it's only about 2% of only female-led businesses have access to VC funding as of 2019. And you can imagine for African SMEs, I'm sure it's even smaller than that 2%. And, I think, it goes that if there are more women sort of in power that are in charge of these VCs, in charge of these funders and, these financiers, of course, that there is more of attraction that more women would actually have access to the funding in itself. And I think just to sort of harp on what everybody said, not just, of course, providing the funding, but of course the mentorship as well, because women do save very differently and informally than men do. It's been proven as well, whether it be in jewelry, livestock, things like that. And as well, there is already this distorted perception that they have due to societies as well, changing that and building up that confidence to ensure that they're able to know that they can access those kind of financing products in the market. Yeah.
Fantastic. It has been an absolute pleasure to host this panel. I want to thank you all individually, Rob, Josephine, Wayne, Tito, Agnes. It has been absolutely wonderful. The insights are amazing. We truly have a lot of work ahead of us as a whole ecosystem. We have this saying, it takes an ecosystem to raise a startup, and we are all very accountable and responsible to do that. I want to thank you sincerely for all those who've been listening into this particular session. There is truly hope for our beautiful continent that's called Africa, and we can make a difference one entrepreneur at a time. Let's just keep on keeping on at it. Thank you very much.